not winning 90% of your new business because you have some sort of incredible value.
I'm going to take a bit of a different angle.
I've got a budget this big. I'm going to give it to you because you have a really killer plan.
You give a Red Bull to a turtle, what do you expect?
I think that's a dead turtle. So let's move on to...
E-break.
Cheers.
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 Does your current premium finance company lock you into long-term agreements? That's because they don't want you talking to us. At IFS, we win your business the good old-fashioned way, with customer service. I know you don't always have to use a premium finance company, but when you do, you should use IFS. Cheers.
Hi there, and welcome to the Digital Insurance Pint podcast. As always, I'm your host, Tom Reed. I'm joined by my colleagues, Steve Earle, CEO of Cheap Insurance and Bald Insurance.
Hello.
Jeff Roy, CEO of Excalibur Insurance.
Welcome from Las Vegas.
Adam Mitchell, CEO of Mitch Insurance.
Hello.
And today we're pleased to be joined once again by Sherif Gemayel, CEO of Trufla.
Hi, everyone.
Sherif, how are you this fine October day?
Practically perfect. This year's almost done.
So normally this is the point where normally we get our guests to intro themselves, but Sherif's been on this show a number of times. Pretty sure everybody knows who Sherif is. So I'm going to say, fuck it. Let's just skip the intro and get into the meat of the episode. So I'll start here, and then I'll let my colleagues jump in here. So Sherif, we're this whole season's about artificial intelligence, and I know you have some work in that space you want to share with us. But maybe just to give a lay of the land, can you share with us what the current Trufla set of products looks like? Give us a brief explanation of each of your different elements there.
Yeah, thanks, Tom. Really, you can break it down to three different products that we license out. Each product covers one part of the life cycle of an insurance policy, distributing an insurance policy. So the first product, which is TruWeb, focuses on acquisition of client and powering, basically driving leads and converting those leads for the brokerage. The second product is called TruMarket. That is a lead management CRM, quote bind, issue tool, a little bit of a bunch of things, but that kind of fills the product placement piece or the order. And the last part of the life cycle is post sale, so managing the policy after it's sold. So that's our True Mobile platform. It used to be known as just a mobile app and portal, but it's evolved to something a lot more powerful than that. That's where we bring in a lot of our AI capabilities and retention tools and whatnot in that platform. So it's three platforms that covers the life cycle of the policy.
So this AI-oriented episode is brought to you by the real people at IFS Premium Finance. Thanks, guys, for all you do for us.
Well, let's dig into broker retention X-ray. We're using it at Excalibur, but I'd like to hear your version and tell all the listeners why you built it. How does it work? What results are other brokers seeing that have been on it?
The reality is the renewal process in a brokerage is the most painful part and the most time-consuming part of the of the management of a brokerage. And so we were always trying to look for things to help facilitate that. The average brokerage right now takes about half an hour on a per file basis, and the only way they can segment their clients is by looking at what happened on the renewal on a year-over-year basis by percentage. And from there, they would make some decisions as to whether they want to remarket the client or not. We built out Retention X-Ray to not just speed up that process, but provide intelligence to brokers on what they should actually do on a client-by-client basis. Most of the time, even in the traditional sense, A broker might go through an entire remarket process for a client and spend half hour, 45 minutes on that client, only to find out that they can't even move the client. Like they're with the best market already. Rather than spending half an hour, 45 minutes, Retention X-ray will give you that answer in seconds, right? And it'll be able to tell you, give you information up front to help the broker make a decision. Were there claims? Were there convictions? Was there any material risk changes on the policy? It's just arming the broker with more knowledge up front so that they can figure out quickly what they need to do on a client by client basis.
The rates you're doing, are they book rates? Are they APIs? Or are you using AI rating when you're comparing the rates? Where is this data coming from to come up with these numbers?
Great question. It's pure AI. It is not book rates. It's not API connectivity. Basically, what we're doing is we aggregate data from a number of brokerages, and we've created a big data lake of anonymized data. So we're pretty clear that the broker owns their data, and every brokerage has their own container with their data set in it. We anonymize it, so we strip out anything identifiable from either the client or the brokerage in this data lake. And we then take each client on a client by client basis, looking at their data attributes, who they are, where they live, what's their risk profile, what are they covering, what vehicles, home, and whatever, and then comparing it to this broader data pool to get a really high degree of accuracy of the rate. We don't actually give the rate to the broker, but we'll tell the broker how price competitive that renewal is relative to the rest of the market if they went out and shopped today. So it's not a bindable rate that we're giving. It's really just an indicator as to what the broker should do with that client based on how price intense that renewal is to the market.
What kind of results are the brokers using it seeing? I mean, aside from Jeff probably has some commentary, but what are they getting back to you with? Like, has this totally changed the way they look at their renewals, their processes, and any positive effects?
Yeah, we've got results from a lot of different brokerages. One of the larger brokerages in the country a couple months ago reported to us an 80% reduction in their renewal process. So basically, they're able to segment the clients into such granular buckets that they will only look at a certain segment of their clients, and the rest they will send automated messages to the clients saying, hey, we've taken a look at your policy and you're in great shape, or we'll call you in a few days with a result. So what was traditionally a 30 to 45 minute process on a per client basis is now taking kind of 3 to 5 minutes on a per client basis. And most of those clients are taking seconds. So when you average it out with the remarketing, there's some pretty massive efficiencies. The other thing that it's done, which we didn't anticipate, but was something we recognized earlier in the year, there's email automation that we've now tied into it so that the system, based on the segmentation, can automate certain messages to the clients to prevent phone calls from coming in. That's one of the other big pain points for brokerages is while they get the renewal, the client is already calling in saying, what the heck happened with my renewal? And the only answer a broker can give at that point is, I don't know. I need to call you back because I need to look into your policy. I need to answer the why. I need to figure out what happened. And let's be honest, they're not getting a call back anytime soon because if they just got their renewal, they're probably 30 to 45 days out. I have to call people whose renewals are coming up next week and get back to them. So what we've also found is it has reduced phone calls by same brokerage that reported to us the 80% reduction. It reduced their phone calls by 34%. So we're talking about some pretty significant savings. They were about to add 7 more people to their renewal team. They've since axed those roles, so they're not adding them, and they've moved people into other roles inside of the organization. So it's some pretty significant ROI.
So, Sherif, you've had a version of Retention X-ray for some time, for a few years, actually, right? And you've made it more sophisticated. You've added in the email piece and so on, but you've had you've had this capability for a number of years. And I guess I'm assuming that you've seen an uptick in interest. But why do you think that is? Why do you think brokers didn't jump on this a couple of years ago? I mean, there's clear and obvious benefits to what your service provides. Why do you think brokers didn't jump all over this when you first came out with it?
So two things in particular. One, you have to know that people didn't really understand what AI was until Chat GPT really came into the picture, and they started understanding what the power of AI was and how it could speed things up. So there was no trust in it, and a lack of understanding. That certainly played a role. The second part is, I mean, let's be honest, brokers don't even trust the rates that come out of the existing rating engines to provide to the clients. There is no broker that doesn't upload to the carrier portal first, validate the accuracy and authenticity of the rate before giving it to the client, let alone trusting an AI system. So when those two things kind of converged, brokers started realizing that, wait a minute, I don't have to have 100% accuracy, but the way we coin retention x-rays, it's not intended to be, kind of a silver bullet that hits the bullseye. It's intended to be a flashlight that points the broker in the right direction to move through the maze faster, to get to it, to make a decision faster. And when they wrap their minds around that, then it's like, oh yeah, okay, that's why. And that's where it really started picking up steam.
I've seen brokers in the past, including myself when I was a broker, looking at ways to cut down the volume of renewal work that came in by looking at things like, essentially it was more price, like the price go up by 10% or $100 or whatever. And it was a really rough estimation because people's tolerances are quite different and what the market looks like is quite different. And you didn't know, you just had this really simple metric because you had to manage the work somehow. So conceptually, I'm not sure you're doing much different from that, except you're doing it in a much more sophisticated, much more accurate way. Is that a fair statement?
Yeah, I mean, even when you're looking at pricing on a year-over-year basis, so the renewal change, none of the existing systems actually do that properly either because they don't factor in what happened midterm on that policy. If there were additions or deletions that were made on the policy, they're comparing it to the download that happened in the previous term. So there's still things to kind of figure out there. What we did is, I mean, we first of all, we take that and we, as best as possible, try to extrapolate it on an annualized basis. But then what we do is say, can you actually move this client? Like, is it even worthwhile for you to even try to remarket this client? Because most of the time, a broker will remarket. The only answer they give the client back is, well, I shopped it for you, but you're actually still in the right place. Or, by the time they figure out that they, should they do a remarket or not, they realize the client has a claim or two and a conviction, or it went up because they added a vehicle or they added a seasonal home or whatever it is. It's taken a lot of time. We're just trying to bring that all up front faster, not diminishing the value of that renewal change. It plays a big part in it, but adding additional pieces to the equation.
So before Adam jumps in with some hyper intelligent questions, just a general question about what you see with brokerage operations. Do you see more brokers running with a pure, quote, retention/renewal team, or do you see more that are running where renewals are sort of blended in with the service team?
It's all over the place. So I'll tell you kind of the way it's being used right now through a few of the brokerages that we work with. So some brokers have where they have their CSRs that have their own books. They have books that they manage. And so they've got one screen open with the renewals and the other screen open with retention x-ray, helping provide guidance on a client by client basis and kind of moving through their lists much faster. Some brokerages, that would be like the Excalibur model. Some brokerages, like the one that I mentioned that saw this massive efficiency, they have a renewal retention team, right? So now they've just added more segmentation on how they're treating every client, and then adding the automated messages on top of that. Another way, we have another brokerage that would be, again, fairly large brokerage. They extract the information from X-ray, cross-reference it with other, data pieces they have inside of the brokerage, cut it up, and then distribute to their CSRs on a monthly basis. Here's your list for the month. We also have other brokerages that say, actually, I want an automated email to my CSRs once per week at the beginning of the week saying, these are the files you're working on this week, and everything else is kind of automated. So it's still all over the place. There isn't any right or wrong way to do it. Whichever way a broker decides to do it, there's still efficiencies to be gained through any of the processes.
So Sherif, your tool basically could give the broker the ability to compare prices between their current book of business and moving it to another provider, correct? Is that something somebody could do? Explain how that would work if somebody used your tool to do that.
Yeah, because it's AI based, we actually have a few brokerages right now that are looking at moving various parts of their book of business to other markets. And so we can do a full analysis on the entire book, let them know which markets are best fit on an individual client basis. And we can even go as far as providing a monthly report saying, here's all your clients, here's the markets you're contracted with, here's the rate for them, here's where we think you can move it, and they can figure out how much volume they can move and really optimize the retention of that book they're looking at moving. So when I was a broker, I knew that there was tools available to me to be able to optimize my compensation with carriers by moving certain volumes of business around. Now this tool allows them to do it in a really targeted, intelligent way.
So a question, just to kind of jump on that and move over to True Market, the sales side of the CRM, where are you at in terms of somebody getting a quote, verifying it, and actually writing an application up in the True Market? Do you have all the carriers in there? Are the rates accurate? Can you actually do that like the other BMSs at this point on your system?
Yeah, we have almost all the carriers. There are certain carriers that we don't yet, and especially some of the smaller, let's call it more regional carriers. So that is something we are actively working on. We're actually in discussion right now with 11 carriers with their APIs to bring that in faster. What we've kind of identified with the carriers is that our integration process is a lot more streamlined and a lot more efficient. I know every carrier hears that from the vendors, but the pain from a carrier side is they need to put a lot of resources to testing and making sure that the integrations are done properly. We've facilitated a lot of that by bringing in a ton of automation on testing. So we've got a few that are already in there right now that are on the docket, soon to be integrated, that we're kind of working through the integrations, and some that are still on the list. But by the end of next year, we think we'll have north of 7 API integrations, possibly 8 API integrations by the end of the year. But we have most of those rates anyhow right now.
Again, your product is probably a third of the price of the other BMS, AMS carriers, is my approximation. But currently you can't do all the rating quite yet. So people are in the messy middle. How would a broker push through? Because you have a better technology, it's there, but you're missing a couple markets. What do you do to kind of bridge the gap?
Well, what we've said to brokers is the brokers that have started utilizing it don't need some of those markets. And it's actually opened up the conversation with some of the brokers and them kind of realizing on their own, do I actually need all of these markets? I mean, when I had Sharp Insurance and I was selling in Alberta and I was selling in Ontario and everything, the most we ever had was 4 markets, right? And we were still able to capture a lot of volume. I know, like Adam, you guys have a ton of markets on yours. Your operation is a little bit different than what we did, but I could probably confidently say that most of the volume that brokers are placing is usually in 3 or 4 markets, and the rest kind of make up the bottom 15%
They
or
might end up in 3 or 4 markets in 4 years, anyways.
with the way things are unfolding in certain provinces. But I mean, those are business decisions. But most of the most important markets, we have them already, but we're going to have the API to the last kind of remaining few.
It's an interesting comment though, because I have a theory that once the markets that are useful markets, and they're big enough, their products are robust enough, and they have working APIs that really does make it more effective and efficient from a broker's perspective. Those markets that don't bring that kind of efficiency to the broker's office are going to are going to be excluded from that broker's operation, whether they get canceled or not. But they will definitely be disadvantaged when it comes to new business.
Or tried a different way, Tom. How about selected against?
Sure.
Because that's the biggest fear for a market. Because if, again, it comes down to a trust issue. If I've got an API connection and I've got, a rate that is guaranteed by the carrier based on the inputs that are there, and I don't have to upload it, and I can validate the authenticity and accuracy of it, versus another one, well, brokers are usually going to take the path of least resistance.
I have interesting observation as I listen to all this. Like the past number of years, we've heard about from our insurers that we don't want to go down the road that occurred in the UK with aggregators, right? And how they decimated the brokerage industry there because it was so easy to shop. And business was moving around and the consumer. Now, what I like about this is whether it's you, Sherif, or what the guys at Quandary are doing, I'm not worried about aggregators now in Canada. I think we've defended that well enough. But you're now empowering brokers to do that shopping in a reasonable amount of time and actually deliver to our customers what they expect of us. I really like that. And that gives us a competitive advantage in this space compared to what went on in the UK.
Steve, you've heard me say this time and time again. And this is not I'm not being paid by the association for this. The best way to distribute insurance is through a broker. And if you give brokers the same capabilities as other tech companies, think of your Amazons, your Googles, your Ubers, your Airbnbs and whatnot, these companies are distributors and they are the kings of distribution. You give broker the same way they should be the king of distribution. You don't go to Amazon, look for a USB-C cable and only find one result and think Amazon is going to succeed. What gives a direct writer that advantage to sell one product? They're just doing it more efficiently. They're doing it faster, and you give brokers those same capabilities. I've always said that the existing technology providers are actually part of the problem. They're part of the bottleneck for brokers to distribute bigger, better, faster. And that's all we're trying to solve for.
I mean, AI is obviously a big topic of conversation. So if you think now, I'm looking for your sense because you're not going to know the accurate answer to this question. But if you think of the sales that you guys have made, you're probably aware of Quandary and Koios and some of the other sort of AI companies in this space. What percentage of Canadian brokers do you think either have bought one of these tools or are sort of at the latter stages of buying? Like, are we talking 30%, 2%? Where do you think that is?
I'd say closer to 50%. I mean,
5-0?
5-0, yeah.
Wow.
I'd say 5. Sorry, can I reframe that?
Of course.
I'd say 50 of the policies that are managed through brokerages in Canada those brokers will have access to AI. Now, we know the larger brokerages, they command the most volume. Smaller brokerages are getting there. The challenge is with some of these tools, it's still cost prohibitive. There's either big transactional costs or there's big upfront costs that a smaller brokerage may not be able to swallow. But I would say 50% of policies that are being renewed through brokerages, those brokerages have AI of some form that's being used.
Well, that is a much bigger number than I actually had anticipated. I mean, Jeff's obviously using your tool. Adam, Steve, are you guys actively engaged in one AI project or another?
Yeah, but I would expect we're a different representation of the masses. Like 50 is surprising.
This group is a different demographic than the average broker.
Well, 50%, or sorry, the top 50 brokerages in Ontario represent about 80% of the volume in Ontario. And if I go through
On a volume percentage, I'd probably tend to agree.
yes, so if you kind of go through those top 50, most of them have implemented AI in some shape or form with some sort of provider. And so that's where I'm going with the 50%. Is 50% of the policies that are going through brokerages would have an AI tool.
Because you only need 20 brokerages to represent something like that. It's probably close.
Okay, so I hear what you're saying. Basically, it's based on the number of seats, so 50% of the licensed brokers as opposed to brokerages. So when one thinks about the big brokers, the advantage they have with markets, the advantage they have with scale, now essentially what I'm hearing is that the big brokerages are also going to have another advantage in their tool belt, which is AI. So, one could speculate that will even further accelerate some of the M&A activity, some of the consolidation that's been going on, because the smaller brokers will be just even less able to compete.
Well, look at it like this. That stat that I gave Steve earlier when he was asking about the efficiency, the 80% reduction, this would be one of the largest brokerages in the country. And they would be in your top 10 brokerages globally. So seeing that level of efficiency is massive. Massive, right? Jeff said it. Everyone's heard Jeff say it. He's coined it and he's patented it. Brokers will not be replaced by AI, but those using AI will replace those that don't, because they can just now move faster and distribute faster.
Your platform, is there any ability? I talk about digital virtual assistants. So basically using AI, natural language processing, and large language models to basically call out on leads, to book appointments. Are you going to be able to API that into your platform in the next 6 months if we build a digital virtual assistant to do a bunch of the grunt work to make your salespeople that much more efficient? Is that something that's doable?
I don't think in the next 6 months. I think we've got a pretty big roadmap of some priorities that we've got to build out, and a lot of our resources right now are going into making sure we have the right connections with the carriers, especially in an evolving regulatory world. There's some challenges in some provinces, so our focus is definitely on that. But what we've shown is our platform can actually integrate with any external. Any kind of external capabilities and bring that data forward so that you can have the best VA. It's just now where on that roadmap does it fit?
So if somebody had the money, they could jump on and fund it themselves. They could jump up in the roadmap, right?
Well, I mean, it's always a bandwidth issue, and remember, we have 130, 140 people, and it's still a bandwidth. Bandwidth is bandwidth is a challenge for every company right now.
Going back to that widening divide between the mega brokers and the average brokers, I would imagine that has to be a concern to the associations if they're not already sort of anticipating that. So let's say the associations do watch this podcast and realize, holy crap, there's this other issue that's now facing the average broker, who are still members of my association. In your opinion, what do you think associations could do to help those smaller brokers?
Well, we are seeing associations now that are kind of jumping in to try to help by getting the message of good data, AI capabilities, and really augmenting their operations using AI. There's a lot of chatter happening, and associations. Obviously we're knee deep in conference season right now. That is the number one thing that is being talked about at all the conferences. It's all about tech, and then above tech is AI, kind of all things AI. So the message is getting out, but whether brokers heed it or not, that's a whole other ballgame. And I will say this too. AI ain't a silver bullet at all. You can see clearly between brokerages, those that execute using it properly and those that just license it and, kind of just say we use AI, but aren't actually doing anything with it. So you could still have a small brokerage that's using it properly and execute properly and can accelerate much faster than a big brokerage that isn't deploying it properly, that isn't, executing on it properly. But you've got to have will. And you can have the best idea, but if you don't execute, it doesn't matter.
AI is not a silver bullet, but some brokers aren't holding a gun right now. So that's what you run into.
Rough numbers from Rebo. There's 930 offices in Ontario. There's 20,000 brokers or users registered. There is 9,000 of those 20,000 are registered with the top 30 offices, like biggest brokers. So almost 50% reside in the top. What is that? 30 out of 920, like tiny percentage. Like it's way greater than the Pareto principle. 11,000 are in the top 67 out of 900. So just to Sherif's point, when the top like tipping point figure this out on an organizational level that size, there's going to be thousands of brokers continuing to do it an inefficient way.
Yeah, well, everybody's thinking linear, and AI is exponential, right? So it's going to be a huge shift.
Let's take that. Like, Sherif, you've made a career out of being a bit of a visionary and having an eye on the future, at least more so than the others, and taking some bold shots. Where do you think this is going? Of AI, at least from my perspective, has snuck up on us way faster than anticipated. Like the speed it's evolving at and the access to it is crazy. What do you think the fallout from this is going to be, combined with M&A and the changing economics and the whole landscape?
I mean, I was having a conversation with someone this morning that was saying that in the M&A world right now, there is a lot less to buy. There is definitely a clear slowdown, especially in Canada. So
call it the bottom of the DVD bin at Walmart.
But that means the prices are going to remain elevated because the auctioning for these brokerages is driving the prices up, which means you need to gain more efficiency. You need to be able to extract more profitability out of the
but somewhere between the bottom 10 to 30% might not even be transactionally viable, given the size of them, like can't even afford to pay for the due diligence. So
you're right. And layer on top of that, what's happening in some markets with, there's a lot of pressure at a government level to reduce premiums, to, find different creative ways to reduce premiums.
Yeah, you Albertans.
Anytime you reduce premiums, that just means it's a reduction in compensation. But it's not going to reduce the amount of work, because now you're just reducing the compensation on a per policy basis. And if you ain't finding those efficiencies, it becomes even more problematic. Like it's a cascading effect, right? And Jeff, you were there at Amplify when we were talking with Graham about commissions, right? Like it's in every single carrier boardroom. It's not a secret. It is like the worst kept secret. They talk about it constantly. They're just waiting for the first one to flinch, kind of pull it. Who's going to be the first that's going to make a move, or who's going to start segmenting based on profitability of book, compensation based on profitability of book.
I hate the subject, but I mean, I'm curious, where did you end up at the Amplify? There was a whole panel on this, and yep. I think there was Jeff and Billiard and Graham. What was the conclusion, or where did that end?
That the Jeff, correct me if I'm wrong, but that it is coming. But before that happens, there needs to be better connectivity between, like, the carriers are part of the problem with their connectivity. The existing vendors are part of the problem with it. You need to be able to actually see material ROI on the the tools that are being licensed and actually gaining efficiencies before that can actually happen.
So Sherif, let's get your crystal ball out. We've peered into it a couple of times on this show, but I'm going to ask you a multi-part question. So let's fast forward. And normally I'd say 5 years, but AI is going so fast, exponential, as Jeff says. Let's go 2 years. And so I give you a 3-part question here. What do you think? What do you think that, with all the activity that's happening in the AI space, people adopting it, new stuff coming out on a regular basis, what do you see the broker landscape looking at? What do you see the broker landscape looking like? What do you see the carrier landscape looking like? And what do you think is sort of the next big thing in AI in general?
So I did this live at a conference recently where I asked ChatGPT who kind of wins the war, the AI war. Is it carriers or is it brokers? And I loved the answer that I'll share it. It said in the short term, carriers will win it because they just have access to a lot more data and their data set is a lot more complete than brokers are. But brokers actually win the long game if they've got access to better data and cleaner data because they just have access to a much bigger market. Brokers, the brokers that are the smaller brokerages right now, we've said this so many times over the last few years, but really I think we're at an inflection point where if they don't do something now, they will not survive. But that doesn't mean there won't be small brokerages. New entrants are coming into the market that are just moving that much faster than the existing, the existing legacy brokers, that they'll be able to move and accelerate and grow a lot faster. So I don't think we see a reduction in number of brokerages. I just think it changes a bit where you've got your behemoths that are going to continue to grow, and then your new entrants that are going to continually disrupt how they distribute. From a carrier perspective, again, those that have invested over the years on good data, clean data, actuarial, bringing in certain, new data modeling and bringing in third-party data sources and really thinking outside the box, they're going to win the long game for sure from a profitability perspective. The cost of AI is going down considerably. So it'll be easily accessible to everyone, but whoever got out first, if they've done it properly, will probably stay in the lead. They'll just be able to move a lot faster. But in terms of I wouldn't be surprised if we saw less markets, less brokerages, but hyper efficient on both sides of the world.
So Sherif, I want you to add that or address that last of the 3 points is, what's the next big thing in AI? So we've had, big data, machine learning, carrier actuaries have been using stuff for quite some time to build their pricing models. Like the chat GPT and the large language models was like sort of like the straw that broke the camel's back and let everything sort of loose, which is a terrible metaphor, but whatever. There's optical image processing. I've seen some small carriers doing some mind-blowing stuff on image processing. What do you think is sort of the next big thing? I won't hold you to this, but what do you think is the next big sci-fi thing that comes out of the AI world?
AI agents. Agents, like bringing in the data, the rules, the rating, the everything. I mean, there's still an issue of having to figure out the regulatory side of it, but for sure bringing in agents to do a lot of the work that brokers do on a day-to-day basis that actually has nothing to do with their licensing.
DVA, digital virtual assistants, right?
Yeah. But AI assistants.
Yeah, and I think we would be remiss not to mention the fact that there's some nefarious parties out there who are going to get just as good too. So cyber AI has, as it applies to people attacking us, criminals and AI agents, that's going to pick up steam massively.
Actually, that's the thing, Steve, where I know we didn't really touch on it, but in the because AI is still a bright, shiny object, brokers don't really understand yet. I mean, there's the good side of it, and then there's the bad side of it as well, right? And I keep saying this over and over. The only value a brokerage has is in their data. Like their asset is their book of business. It's the data, right? And so if that data is not protected properly, or you're putting that data in the wrong hands, and then it's siphoned out elsewhere, and all of a sudden you've got your clients that are found on the dark web somewhere, your book isn't worth as much anymore. Like you can't just. I know brokers that their employees use the public version of Chat GPT, and they'll put client information in there so that they can write an email, right? But that is not something you should be doing.
Is retention important to your brokerage? Of course it is. That's why at IFS, we have a cancellation prevention process. Want more details? Give us a call. I know you don't always use a premium finance company, but when you do, you should use IFS. Cheers.